Welcome to another Samso production, and this is Coffee with Samso. And I'd like to thank the University of WA Club for the use of their facilities once again. Just before we go into things, I'd like to make mention of the fact that I've been following Poseidon for quite some time. I'm very interested in them, and particularly in the last couple of years as they've gathered momentum towards production. So what I'd like to do is welcome you, Mr. Peter Harold. Thank you for coming today. And Peter, I'll open with this question. You've come here, to Poseidon on the back of Panoramic. What enticed you to come to Poseidon?
Well, it actually goes back before Poseidon, Tony, because I actually was involved with the original discovery of Silver Swan back in 1995 when I was working for MPI Mines. So that was a joint venture between MPI and Outokumpu, and 50-50, and we were the operator. So we discovered that ore body, drilled it out, built the concentrator, and I was the marketing manager, so I was involved in all the shipping. And so yeah, always interested in the project, always kept an eye on it, and tried to buy it when I was at what was Panoramic, when it was for sale, but MPI picked it up again off Outokumpu, so I missed out on that opportunity. Then it got taken over by Lion Ore, and then Norilsk had it. So, and then I'd always kept an eye on Poseidon, so when I left Panoramic I was going to take quite a bit of time off, but this opportunity popped up and I jumped into it.
That makes a lot of sense, particularly when you reference Silver Swan.
Yeah.
And for our viewers out there, do you want to just talk about, and imagine the geo side of you would be jumping out of your skin. What was it like when you discovered Silver Swan? Talk about the grade, for example.
Oh, that was an amazing. So the first intersection, I think the average grade was 14% in situ. And we drilled it out because it was a private company, 50-50 JV. And so we actually discovered it in about May. And by the end of November, we'd actually drilled it out. So that was Murray Pollock's prior company to DDH1. Western Deep, I think it was called, and they drilled it out. And so it was all done so secretively that basically when the drilling contractor left site, they'd actually have to take their the signage off the doors. So our director of exploration, David Burt, was a bit paranoid, and rightly so. He wanted to keep it quiet because he didn't want people to be pegging all around the area. So we came out unexpectedly in November, a private company with one of the highest grade nickel sulfide discoveries in the world ever. I think it was, it ended up being about 65,000 tonnes of nickel, averaging 14% in situ. Just incredible.
It's a staggering result.
It is a staggering discovery. And that was only, I think it started about 250 metres below surface, so between 250 and 500 below surface. So yeah, just incredible. We were so lucky.
Yeah, it certainly explains your natural enthusiasm to pick up the reins there. Just to give a bit more background to the viewers about the setup at Poseidon, we've got 3 projects. Do you want to just talk about?
So I mean, obviously Black Swan is the flagship project, if you like. That's the one that we're looking to get into production in 24. Then we've also got Windara, which was the original old Poseidon NL project, which then got developed by Western Mining, and they mined about 80,000 tonnes of nickel in concentrate from the Mount Windara ore body. There was a decline, there was a processing plant. That was obviously closed down when they ran out of ore, much lower nickel price environment, and the predecessor to, this company, which used to be called Niagara, picked it up when Andrew Forrest was involved, and that was the flagship project at the time. And then obviously subsequent to that, they bought Black Swan from Norilsk, and then Lake Johnston. And the other project we have is Lake Johnston, which is closer to the old Western Areas assets, down sort of south of Norseman, or southwest of Norseman. And that's again a project that produced probably close to 100,000 tonnes of contained nickel in concentrate. There's a processing plant there, and also quite a bit of exploration potential, and there's an existing resource of about 50,000 tonnes of nickel too. So we're quite lucky. We've got over 400,000 tonnes of nickel across the 3 sites. 2 of them have got processing plants, albeit that they've been on care and maintenance for 10 years. But they're in relatively good condition for projects that have been shut down for that long. And then obviously Windara doesn't have a processing plant because that got removed, but the decline's there, even though it's flooded. But we could pump that out, and there's a head frame, so the shaft is still there. So there's a lot of infrastructure that could be utilised. And we're actually thinking maybe with that project we could mine, crush ore, put it through an ore sorter, and then truck that down to Black Swan, for instance, is a potential option which we're going to study.
Yeah, look, I mean, talking about that infrastructure, for me, looking at Poseidon, it's one of the key points of difference. In fact, you're talking of two processing plants, replacement value, I guess 500 million plus. There's other infrastructure too. There's camps and so on.
Yeah, absolutely. So if you start off with Black Swan first, so there's all the infrastructure, as you said. So there's the mill, but even things like tailings dams, processed water. We've got access to a big bore field that was put in. We've got a 5-year access agreement with Norton's on their federal pit to dewater that. All the permitting, and those things take years these days, literally years to get done, which is such a walk-up start for us. Lake Johnston, as you said, there's a processing plant, an airstrip, a 200-person camp, the Windy Hill accommodation village, tailings dams, bore fields, again, all of those things are there and all permitted and so on. Even in Windara, there's accommodation there, smaller, but we're much closer to town there, whereas the other two, Black Swan's only 43 k's from town. So we can bus people in and out or drive in and out daily, so we don't have to build a camp there. So we're really lucky. We're either well located to existing infrastructure, or we've got our own, camp and accommodation and an airstrip. So we're pretty lucky.
Yeah, I think very fortunate and really well endowed with that infrastructure
and resources as well.
And of course, the fundamental of being the resources. But the value proposition, looking at from outside, really ramps up as you get to production. I find that to be a very, very positive aspect of Poseidon. I will talk a little bit about Lake Johnston, which you've just touched on. I noticed too that there was the announcement recently of the EIS, which is the Exploration Incentive Scheme grant, and it was part funding for 15,000 metres drilling program. The thing that I like about it so much is it's not so much the quantum of the funding, it's the fact that this is a highly competitive grant scheme. It's looked at independently and in very technical eyes. So I read a fair bit into that, and we're talking about doing this drilling in Lake Johnston. You have had two main sites there, Emily Ann and what's the other one?
Maggie Hayes.
And Maddie Hayes.
Yep.
Now, both of those, when they were in production, were good grades. Do you want to comment a bit about that?
Yeah, so Lake Johnston was initially developed on the Emily Ann ore body, which is close to where the mill is, and that was a 3.5% ore body. So that was a good grade. They ran out of that material, and so they then developed Maggie Hayes, which was an underground sub-level cave. That project, they mined, I forget the split between the two ore bodies, but there's still 50,000 tonnes of nickel in that resource at about 1.5%. So it's not as good a grade as Emily Ann, but it's still relatively good grade, about the same as the Windara material. And you rightly pointed out. The EIS grant scheme is a lot of people apply for it, and it's a limited amount of money, $25 million a year, I think it is, every year. It moves around a little bit. We were when I first got involved in the company, I probably knew a lot more about Black Swan than I did about Lake Johnston or Windara, and I think probably Lake Johnston was probably third priority really in our minds, but I think that's shifted a bit, and I think the work that New Exco did, so they did a full review of all the drill data, all the geology, and they came up with a whole lot of priority target areas, and they identified the what we call the Western Ultramafic as being a rock system that potentially could host some more of these higher grade Emily Ann style komatiites. So that's what we're targeting with that program, and clearly that was one of the reasons why we got given the grant, because it was considered to be highly prospective for those types of ore bodies, and and well regarded that there was, if we did find something, then we could put it through that plant. So again, the government is investing that money in explorers with a view to getting a return from the royalties, because that's the way they can get a return. So yeah, I think it's a win-win. If we can find something, then it'll be proved, and we had a good experience with that at Savannah, and I can't remember. I think pretty sure though that John Hicks got money from that to drill Savannah North. Yeah, so again, we've had success in other other hats on in that regard.
Yeah, look, it's very promising, and I think it actually leads quite nicely to the next question I was going to put to you, which is about the Bankable Feasibility Study, which was released late last month.
Yes.
One of the key things that I know you'll be seeking to do is to increase the life of mine.
Yeah.
And so expanding the resource is obviously very fundamental to that.
Yeah.
And I will talk about the Bankable Feasibility Study, which came back, and it was very impressive. I mean, you looked at the all-in sustainable costs of about $4.90, and at that time that the numbers were plugged into the spreadsheet on the main financial side of things, you were using a nickel price of about $11.60. The last couple of weeks we've seen the nickel price resume an upward trajectory. At the moment it's sitting at around about $13, and it's been nudging up to $14. The view that I have is that the base cost will be at least 13, maybe at worst case scenario is 12. But if you throw in those numbers, again, it increases the profitability of the project. Now, you had the internal rate of return of 103%, so which is pretty good by anybody's measure, for goodness sakes. So it's looking good in advance of your final investment decision process. Can you just talk a little bit more about the BFS, because you should be rightfully proud of that. It was very detailed.
Yeah, look, I mean, you know, when I got involved in the project, I looked at the work that was done for the 2018 study, and I could see that there's some other work was needed. It was a relatively short life project. I think it was less than 2 years of ore processing, and you know that to me looked to be was light on, and so we looked at this serpentinite ore, what we had underground, the high grade, and also the grade of the concentrate was concerning to me too, because having been involved in selling concentrate for 30 years and heavily involved in that back at MPI and also at Panoramic, I was concerned that the quality of that concentrate with that high MgO. So Dave Maxton, our project metallurgist, really sort of cracked the code, if you like, or had a breakthrough, and he worked out that by utilising the old Silver Swan mill, you could fine grind the rougher concentrate and add in some, and sort of two parts. The other one was add in some Silver Swan tailings, which was about 0.9 nickel, but it had a lot of iron. So that helped with your iron MgO ratio. So you end up with a 15% nickel product, which is a high grade nickel con, which is great, but also an iron MgO ratio of better than 5:1. Whereas previously, just before they stopped operating, some of the numbers that we saw on the production from the concentrate was iron MgO ratios of less than 2:1, which makes it really tough for the smelters. So I think that's been a really important point. That was an improvement from the 2018 study. We've extended the mine life out, or the processing life out, to 4 years, 3 years of ore and a year of stockpile. As you know, we're drilling now. We started yesterday to hopefully increase that reserve, so convert more of that serpentinite material in, and so we can see a pathway to extending the mine life even on the concentrate for the smelter. But there's also this opportunity around being able to process the talc carb ore, which currently is not in the mining, or it's not in the processing regime. So if you're mining it, we'll just stockpile it. But going forward, there's a much bigger resource reserve conversion potential if you go for the rougher concentrate. So I think the way that we're thinking now is the Bankable Feasibility Study that we've released in November is kind of like the base case, and that's what we'll finance the project on. That's what all the restart will be based on. But we've got a very strong feeling that, subject to the test work that we're doing on the Stage 2 project, that we'll be able to at some point in time go into the 2.2 million tonne per annum. So ramp up the feed and actually start feeding in the high talc material, which previously would create a problem with the concentrate. But then you've got the ability to sell that into a different market. So I think we've got a really exciting opportunity there.
Look, it is immensely exciting, and adding further to that excitement is now looking at the big picture, Peter,
Yeah.
and I know you do a very good job of doing that. So if I can, I'll link your comments then back to the potential, and it's potential we're talking about, through the Memorandum of Understanding with PBT.
Yes.
Because I think you're processing a product, what are you going to do with it, and and how does this fit into the larger picture?
Yeah, that's a good question. So look, obviously, stage one, the concentrate, 15% con, iron MgO ratio better than 5:1. That can go through a flash furnace, right? So that can go to Finland, to Poseidon, go to Johnston. BHP could treat it here at the Kalgoorlie smelter. That's a smeltable concentrate. It could go to Canada, get treated at any of the operating plants there. That's not an issue. It just gets down to who wants it the most, right? But that material can also be treated by pressure oxidation, a la the process route that pure batteries are talking about with the Kalgoorlie refinery, or it could go into a high pressure acid leach plant as well, at a certain amount, because primarily they're feeding in laterite ore, but you can take some sulfide material. So we see, is happening in a lot of the industry. There's changes. I mean, the Outokumpu flash furnace is 1950s technology, right? It's been around for 70 years. I mean, it's the same one that they built in Finland, same blueprints they use for Kalgoorlie, and then the same as they use for Jingshuan. So that technology has been around for 70 years, right? So there's a move afoot, and you can see that there's more nickel required. We know there's another 2 million tonnes of nickel required between now and 2030, and all for the electric vehicle, but also for the growth in stainless steel. So you've got to have the ability to bypass the old, going from concentrate to matte to nickel metal. People don't need nickel metal anymore. They either want nickel pig iron to go to stainless, or they want nickel sulfate to go into batteries. So, to my way of thinking, the old smelting, no one's going to build another conventional smelter. They're going to do something different, and it's definitely going to be some sort of leaching, and that's where POX, pressure oxidation, HPAL, these types of things are going to come in. And to the point that we're actually studying for the stage 2 project, the Ruffacon, we're actually looking at what it would cost us to build our own POX plant, just so we can understand the economics. I don't think that we're going to do that, because I think whether it's Pure Battery or somebody else, or Pure Battery and others, I think there's going to be a number of pressure oxidation plants built in Western Australia to treat these products. And so going forward, I think smelters will always be there, and they'll always, because they're not going to stop making nickel, but they're going to start changing their end product away from electrolytic nickel to much more sulfates and battery grade products. The stainless steel guys are going to buy nickel pig iron. I think that's the primary nickel coming for them. So that's Indonesia, but we're really going to be feeding into that battery thematic, and that's why a group like PBT, who have obviously just got some solid funding for their plant in Germany, are very serious about building that plant in Kalgoorlie. They got a grant from the government, from $120 million from the federal government under the MMI scheme, or grant scheme, and that's a lot of money for a project with an estimated capital cost of around about $500 million. That's on the scoping study. Their feasibility study will be out sort of second quarter of next year, and that sort of ties in with our feasibility study on the stage 2 project. But I think the market's got to understand is, we're not going to hold up restarting for that. If we can get all the funding and everything else sorted out for the stage 1, which is the smelter grade con, we'll press the button on that basis. And then we can obviously, morph into the stage 2 or the Ruffacon at some point in time in the future. And that's the benefit of having all of that infrastructure that you mentioned before. Yeah.
And look, with my national perspective hat on, the tie-in with Pure Battery Technologies is that what we're seeing is globally government's recognition of the strategic importance of nickel. It's rightfully regarded as a critical mineral, and obviously part of that narrative is involving the electrification. But that their own federal government has backed it to the extent of a $120 million grant, with PBT partnering with Poseidon, hopefully. So I really want that to happen. But as you say, intimate, regardless of whether it happens, there's a forward plan regardless. But the global significance of nickel is exciting, and the recognition at government levels I think is really important. And you've had good interaction clearly with government stakeholders.
Oh yeah, look, I mean, you're absolutely right. I mean, the world's changed, and I've been in nickel for 30 years, and I've never seen an outlook look as good. I mean, always up until 3 or 4 years ago, the nickel supply and demand was really driven by stainless steel, and unfortunately, we had that big run up when the Indonesians banned the export, and that created a situation which is what they intended, where there was all that downstream processing, basically people building nickel, ferronickel or nickel pig iron plants to the extent that the Shan, who was the world's biggest stainless steel producer, is now the world's biggest nickel producer. 600,000 tonnes of nickel from nothing. I mean, that's bigger than Norilsk and Western Mining or BHP now, and Glencore, all those guys. I mean, incredible. And so there was a paradigm shift, and I was really concerned. When I was involved in Panoramic and we closed Savannah down, was because I just thought that nickel was going to really struggle. Nickel produced through sulfide to produce electrolyte nickel was kind of a tough industry because the cost was so much higher than nickel pig iron, and that was going to create a real issue. Now, what I hadn't anticipated and what obviously became apparent was then the whole move to electric vehicles, and that's been the paradigm shift. And because of the chemistry of the battery, these nickel lithium hydride batteries are so critical for the current and future generation of battery. That's what the industry's landed on for the average battery. And I think what I saw the other day was the average 160 kilowatt electric car, something like 68 kilograms of graphite, 30 kilograms of nickel, and then it drops down to about 8 kilograms of lithium. So I was always of the view that lithium was much bigger percentage, but realistically it's graphite first, obviously, and then nickel number two, which was surprising, and hence the reason why you need so much more nickel. And when I started in nickel 30 years ago, primary nickel production per annum in the world was about 1 million tonnes. It's now close to 3, and it's got to be 5 in the next 7 years. I mean, that's a massive increase, and it can't be nickel pig iron. It's got to be nickel sulfate coming through either mixed hydroxide, and that's where you're seeing a huge amount of investment going forward. And I think we're going to see that with with these plants we're talking about in WA. They will produce mixed hydroxide, and then that'll be fed into plants like what Pure Battery's talking about and others. I mean, they're not the only ones. There are other people talking about building downstream processing capacity in Australia.
Yeah, well, that's, as I say, with my national hat on, that's what I want to see happen.
Yeah, I think we all do. And we're talking before about our kids and their kids, and what would be fantastic would be to see a lot more downstream processing of minerals in Australia. Now, historically, there's been reasons why that hasn't happened. I mean, traditionally, post World War II, all of the Japan, Korea, the Germans, they all had that infrastructure in place for the end product, and so they were buying, iron ore or concentrate, and they had all the smelters and the refineries already established, and the mines and so on in Australia they weren't big enough, other than say Western Mining. So it was a lot easier and cheaper just to produce concentrate or ore and sell that. But I think now with federal government, state government, motor car industry, the whole security of supply chain and all these things. I mean, there just now is a drive to increase the amount of value add in Australia, and that's got to be good for the country. It's got to be good for us, the miners. It's got to be great for us and our kids and their kids, because it's just going to mean so many more job opportunities especially in Western Australia. I think it's fantastic.
Yeah, it is. I mean, if you're thinking about what commodities to be into, nickel would be in the top couple.
Oh yeah, I think all the commodities. I mean, even gold. I mean, let's face it. I mean, gold's had a resurgence recently. I saw that China had been a net buyer of gold, 32 tonnes recently. I mean, I think that there was a lot of sort of strange sort of machinations with crypto, but I think now you've actually got a situation where, I mean, gold will always be, when I first started in mining, gold was $235 an ounce. Now it's $2,000 an ounce, US. So, and people always want to have some gold in their portfolio, right? And it is used. I mean, there's a lot of, gold used in industry. People don't realise that. So I think, that's going to be good. And I think, iron ore still, obviously, the nickel, copper, rare earths, all the other. It's wonderful what resources we have in WA, and the ability for us to, and just also too, you can negotiate with the traditional owners, and there is a pathway to work with them, and that's really improved over the last 10, 15 years to a point now where it's very rare that they will stop a project unless there's a real issue with where the project is located. But it's they work together, and there's an established pathway for them to be involved, Indigenous employment, royalty streams, all those other things. And so, to my way of thinking, it's all starting to come together, and everybody's starting to sing from the same hymn book. And it's all about, developing these projects in a sustainable, looking after the environment, and getting to a point where these projects, and that's why projects cost more and take longer, because you've got to jump over a lot more of these hurdles. And because you've got the costs have increased and there's more cost going out because of all these other things, you've got to have a project which is, got to have a good IRR like you talked about before. Yeah.
And it's only improving. Look, it makes it easy for me to segue on to ESG and the credentials that Poseidon has in that regard, and so you've touched on that. For our viewers, can you perhaps just talk a bit more about that?
Yeah, so certainly from Black Swan's perspective, we're going to be on grid power, so that's a benefit. We don't have to burn diesel, so we've been in close discussions and consultation with Western Power for a number of years, and there is an allocation. I mean, it was always on the power line. So that's a huge benefit to actually be able to tap into that, and that avoids. And then look, obviously what's going on now is there's a lot more of the OEMs are starting to produce battery-powered loaders and trucks and so on. So the next generation of underground truck and loader will be electric, and they're coming. It's taken them time to design and build these things, but they're coming, and that's going to be an improvement. And the other benefit of that is, there's always been a bit of an issue about diesel particulate matter and those nanoparticles and what damage they might do to your lungs and so on, and getting into your blood. So I think there's another benefit that, in terms of our health and safety, that we'll see moving away from, diesel machinery underground in time. And the other thing too is you don't have to have anywhere near the amount of ventilation, and you've also got that less heat generated too. Because you're not burning diesel, so you haven't got to get rid of the fumes or the heat. So that reduces the amount of ventilation, which reduces the amount of power you use. I mean, all of it's beneficial, right? And it improves the environment for the workers as well underground, which is primary.
Yeah, no, all pluses there. I'll just bringing everybody up to spec, and today there was an announcement about a drilling program for Black Swan.
Yep.
Can you just give us a little bit more intel on what's happening there and what you're hoping to achieve?
Yeah, so that's a sort of just over 10,000 metres of RC drilling, 1 or 2 rigs. We started yesterday, as you said, and the idea there is we're trying to. There's a lot of material in the resource which is inferred, so you can't convert inferred resources into reserves. So you've got to get it up to a measured or indicated category under JORC, and then you can convert it into a reserve. So there's a bit of work in that regard, and that we hope will get us at least an extra year of reserve from that in the serpentinite material. It's also going to help us too for that early stage production. We'll have a lot more data so that we won't have to do as much grade control drilling when we get going. So we'll be able to plan and sort of better prepare ourselves for those grade fluctuations going into the mill. Because the whole thing about a processing plant is you don't want to try and feed it variability. You want to try and get the ore that's fed into the concentrator pretty much stable within the grade and the spec. And so what you tend to do is you tend to blend off the stockpile. So you might have, medium high or low medium high grade material from the open pit, and depending on that, and there'll be different colours, and so basically you might run a blend of 2 of those buckets, 1 bucket of that and 2 buckets of that, and blend it in, and that way you can get a pretty steady grade of nickel into the front end, and that obviously helps with your recoveries, and just means you can the plant is more balanced, and it doesn't have to deal with those big variations in grade of nickel, because if it does, what tends to happen is you tend to lose more out the back. So it's all about getting a stable feed. So that's all about optimising that. So you potentially we believe that we'll be able to extend the mine life, and we're hoping for at least another year. That's our aim. No guarantee, but that's what we're hoping for. And also just the ability to actually assist us with that planning of the scheduling, and then also we'll use some of that material for some more test work on the stage 2 or the rougher concentrate project as well. So there's 3 uses of that data, if you like.
Yep, it certainly adds to the argument for the value by increasing that life of mine cycle. The funders, the financiers are very important, and they like to see a bigger number. Speaking of the value, I'm talking about share price, and I looked at there's a recent report from MST,
Yes.
which was pretty interesting, and from memory I looked at that, and it said that their expectation was a share price of about 17
Yes.
cents as versus 3.7 I think
Yes.
today. Yeah, do you want to comment on that?
Yeah, look, I mean, I tend not to sort of comment on share prices. I look at market capitalisation relative to our peers, and I think, you know, in our space, 2 peers that are, you know, sort of well regarded as my previous employer being Panoramic with Savannah, market cap's around about 400 million, and then you've got Mincor with a market cap of about 750 million, I think, and you sort of look at the production profile. You know, Savannah's going to do about 7,000 tonnes of nickel, 5,000 tonnes of copper, and I think 500 tonnes of cobalt. So a nickel equivalent, you know, they're probably up around, you know, 10 to 12. So they're going to be, you know, bigger than us, you know, sort of 50% more nickel equivalent, if you like. Mincor producing, well, you know, they're ramping up. It's been slower than they anticipated. And, you know, they've probably got, you know, their market cap is, you know, 750. So they're probably priced for getting to that, you know, planned production. Panoramic are on the way up there. So, you know, I think both of those companies are worth, you know, somewhere between, I mean, you know, 500 and a billion. So, and Mincor's sort of 750, 800. So that's kind of priced about right, you would think. Panoramic's got, obviously, could potentially double from here comfortably. You know, we should be, you know, moving up into that space. So we could easily be a 500 million market cap. And then obviously if we can get ourselves, you know, get that production profile up with the stage 2, or bringing on like Johnston, or bringing down Windara material to get that production up, you know, north of 10. I mean, we've got an internal target as a business, okay, so global, not specific to a project, of at least 15,000 tonnes of nickel contained. And when I was running Panoramic back in the good old days, when we were doing about 8,000 tonnes of nickel out of Savannah and about 12,000 tonnes of nickel in ore from Lanfranchi. So call that, you know, average, it was about 15 or 16,000 tonnes of nickel in con, plus some copper and cobalt credits. Market cap was $1 billion. And the nickel price was lower than it is today. So my sense is, you know, Poseidon with a good restart and a good ramp up, bit of exploration success, a segue through to getting Lake Johnston going again, and people can see a pathway to 15 to 20,000 tonnes of nickel. That's a $500 to $1 billion company any day of the week. So I think so rather than look at the share price, look at what the market capitalisation could be. And let's face it, when we discovered Golden Swan, those first 3 drill holes, you know, our market cap was up over 500. So, you know, a little bit of exploration success down at Lake Johnston, or something else, another high grade discovery at Black Swan, you know, there's a lot of upside and there's very limited. I mean, our market cap's only around 100 million. I mean, it's tiny, but we've had to do a sort of interim equity raise. I mean, we've done a raising really to get us through to the FID. So that's kind of a bit of a, you know, some people are sort of saying, oh, well, I'll just wait. You know, we did a roadshow, a lot of interest, but most people said, oh, look, we'd probably be more interested in a restart funding as opposed to an interim funding. So, you know, we've probably suffered a bit from that. We've also had our major shareholders, both of them, Black Mountain and Wyloo, sell out over, not totally, but sell down. And I think that's had an impact. I know it has. So a negative impact. So there's a lot of reasons why, you know, we've haven't hit some of our timeline targets, which we've been hit for, and I think, you know, we were a bit optimistic in some of our expectations. We hadn't factored in, like the rest of the market hadn't, just the big impact of COVID and the resources sort of boom. So as a result, you know, I mean, when I've always run, you know, projects, you know, 2 weeks for assay is about as long as I mean, we're being told 8 weeks now. So you factor that all into your time, everything blows out. So we have, you know, copped it, you know, to some extent from the market. Look, if everything had been going according to plan and we'd had a normal, a normal study period, we would have had that feasibility study finished sort of June, July, and we would be at FID now, which is what we'd sort of planned, but things just dragged on. Things took longer, took more time. We couldn't get access to people, and just not taking. I mean, I've got to take the blame for it, but I do. But I think we've been unfairly sold off as a result of that. So you combine that with Black Mountain selling a third of their position, Wailu effectively going from 20% down to 3%. All of those things have an impact, right? And you can't say it's one thing in particular, but it's if all of those things combine, and it just becomes a sort of a factor where you get down and you look at it at a market cap of 100 million with all the things that we've got. That's cheap, right? Relative to a lot of other
things. Peter, it's incredible value in my own opinion.
There's a lot of intrinsic value, but Tony, as you said before, you've got to turn it on. Right? At the end of the day, the only way you make money out of these things is to generate positive cash flow, right? And then ultimately your share price appreciates, and hopefully, because we're only talking about a relatively small startup cost, if we can extend that mine life, we have the benefit of being able to repay whatever debt we've put onto the project and start paying dividends. I mean, we did that at Panoramic, and we were a big dividend payer there. And that's the excitement. We've actually got 3 projects, so we don't have to race out and do M&A necessarily. We can just focus our efforts on that. So I think it's a really exciting time. But we've got a lot of things to deliver still, and there's still a question mark over our ability to get these projects going again. So we're going to have to not re-educate the market so much as deliver on some of these targets we've set ourselves now.
Look, I think as someone that's followed Poseidon for a long time, I don't blame the general market for having a level of cynicism.
No.
And Poseidon has suffered from the nickel price cycle all over the shop, and almost each time it's ratcheted up towards production, the prices drop. Yes. And so that's extended this period of time before you're coming into production. But I'm of the same mind as you about the inherent value. Once you reach, you turn the switch on, you're producing, suddenly it's a different value proposition. I can't imagine you having any troubles being motivated getting out of bed in the morning at all.
Definitely not.
And I know from your history you're not daunted insofar as you're a production-oriented managing director. You've been through discoveries and whatnot, but production floats your boat.
Yes.
So.
Yeah, I much prefer. I'm not a geologist. I'm a chemically, a process chemist by training, and I love to see things going, and I love financing, building, selling. That's what I like doing, as in selling the product. And that's always what's got me of interest. I come from a family of bootmakers, actually, but people that made stuff. And so, and I think I told you before, my grandfather was an electrical engineer down at Risdon, Tasmania, the zinc works. So I was always fascinated by that. And I guess that's how I ended up in mining, with that chemical bent, but also having, someone who sort of was already in the industry, so to speak. So, to me, it's about, the way to you create value in mining 2 ways. You can discover new ore bodies, and that's incredible. And we saw what happened with Silver Swan, with when we had Lanfranchi, we discovered the Deacon ore body, 2 million tonnes at 2.5% nickel, 60,000 tonnes of nickel. We discovered Savannah North. I mean, we thought we had a really big discovery at Golden Swan here when I've been there for a couple of weeks and we drilled those holes. Unfortunately, even though 6,000 tonnes is great, if it had been a lot bigger, imagine if it had been another Silver Swan, 60,000 tonnes of 14% nickel. Could have been, based on those 3 holes, there was every chance that was going to be a big discovery. But, for whatever reason, geologically, didn't quite happen. But, there'll be another one there somewhere. I mean, these komatiite channels don't tend to occur on their own. So, there could be something else there. I mean, at Lanfranchi, there were effectively 3 channels, about a kilometre or nearly 2 kilometres between Lanfranchi, Schmitz and Deacon. There were 3 distinct komatiite channels, about, sort of between 1.8 kilometres in strike, I think it was. There could easily be that type of thing at Savannah. Hopefully not Savannah, at Black Swan. There's also the potential for that down at Lake Johnston. And let's face it, Windara, underexplored as well. So with new exploration techniques and so on, so we want to really have a good look at all these things. But you can do that a lot easier and cheaper when you're producing your own cash flow rather than having to keep going back to the markets all the time. One other point you raised was about the stop-start nature of the previous, and that was purely driven by the nickel price. And I know the stories of them raising money. I mean, I heard the story about Dave Singleton jumping on a plane to go and raise some money when the first, when the GFC happened, and he had to pull back, did the right thing, and then was able to pick up both Lake Johnston and Black Swan cheaply for very, very less than $1 million or $1 million each one. And then 2018 did the fees study, raised the money, got $70 million in equity. Black Mountain came in, Andrew Forrest put some more money in, and then nickel price collapsed again. So made absolutely the right call. Don't press the button, and because if you do, you can blow yourself up really quickly in a nickel price that's dropping away. And whereas I think now it's a paradigm shift in terms of the nickel price outlook, and that's when projects like Black Swan that have been sitting there waiting, Norilsk couldn't see back in 2008, 9, 10, 11, 12, the nickel price ever going to do that. So they said, right, we're out, we'll sell it. And they made the right decision at the time for their shareholders. But now we own the assets, nickel price has changed, and we've got to now, to make serious value for shareholders, we've got to turn at least one of these assets on.
Well, timing is everything, and I'm firmly convinced that timing is right. And Peter, followed what you've been doing at Poseidon. You're a very methodical guy. You know what stuff needs to be done. You've got a history of getting it done, and you're just going tick, 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 and getting through them. So personally, I'm optimistic. I will, for a moment, turn back time and talk about Poseidon, going back to the original Poseidon. There may be people around that recall what happened back in 1969. Some of our viewers don't know much about that at all. But Poseidon is almost a mythical name in mining. Do you sometimes, and just again to inform our viewers, it was a stock that traded back in 1969 up towards around the 80 cents a mark, and then eventually it went ballistic to around about $286. Then it crashed in early 69, and again it was all to do with the nickel price. Historic times, and we even did a locally made movie called The Nickel Queen, yep, which my parents forced me to watch, which was hilarious because I had the Golden Tonsils. John Laws did a cameo as some sort of hippie dude at the races.
Yes.
Hilarious stuff.
Hilarious. Yeah, I've watched it a few times. It's on YouTube. I've watched it.
Oh, really?
Yeah.
Oh, God. And so, do you ever sort of every now and then sort of kick yourself or pat yourself on the head or whatever and say, this is Poseidon?
Yeah, look, I mean, it's interesting you raise it, and something that's always fascinated me because I do like history of mining. I've read a lot of books about that, and there's been a lot written about it. It's interesting because it was Poseidon NL, and it came out of an Adelaide-based company, and it discovered obviously Windara, which was the scene of that, and obviously a much less number of shares on issue. Yeah. So as a result, the share price was able to go up as high as it did, and lots of my parents' friends, my wife's parents' friends, who are all in their sort of 80s now, had no people that never worked again. Bought Poseidon shares and made incredible wealth. Obviously people lost money too. We occasionally get phone calls from people, often from Adelaide, saying, I've got these share certificates and is that the same company? We say, well, actually no, that company went into administration in 1970, I think it was. And no, it's not, but hang on to those because the actual certificate's probably worth something. We've got a couple in our office that we've been given, and an incredible story, and just shows you. And today, the modern Poseidon is probably Chalice at the moment with the discovery out here, at Julimar. I mean, something that was. I mean, I went to the AMAC Awards last week, and that was a discovery that the guys made. I think they pegged the ground, cost them $50,000 to peg it, right? Yeah. And it's what less than 100 k's from, it's 80 k's from the CBD, and no one had ever thought.
No one thought there'd be anything there.
There's a company that's got a market cap today of what is it, $3 billion or something like that. Yeah. So that's the modern day.
Thanks, Peter. I had some shares. Thanks for that.
Yeah, well, like when I was at Panoramic, we had shares in Chalice 2 cents. I think we sold them at 5. So yeah, because we did it. We did a joint venture with them on a project over here when a guy called Andrew Bantock was running it back in the day. So yeah, but I mean that's the incredible wealth that can be created, and not just wealth but just opportunities. I mean, assuming that Julimar gets developed, I mean that'll be 400, 500, 600 people will be working there. You imagine the sort of the dollars that'll bring into Bindoon and 2J and fantastic, and you know, royalties for the state, and you know, billions
Tremendous
of dollars
boon for
could
the
be.
state.
So you know, shareholders will do well, but and I think in mining they reckon that for every employee that you employ, it's a 1.8 times. So there's nearly 2 employees that are the knock-on effect. So, you know, if they're going to employ 600 people, that means there'll be over 2,000 people. So nearly 3,000 jobs created from that one program. It's phenomenal. So I really hope that Alex and the team, because it's a wonderful discovery, and I really hope that they can get that project built and operating. And they'll do it, you know, even though it's in a forest and everything else. They'll do that incredibly, you know, environmentally well, and that'll be a good development. But that's what I love about. So, you know, going back to 1969 Poseidon, I really hope that we can emulate that with not just restarting, because that's important, but also further discoveries. I mean, wouldn't it be great if we found another Silver Swan, or another Emily Ann, or another Mount Windara? You know, that would add such, you know, massive increase in shareholder value.
Yeah, look, it would, Peter, and with the drilling programs that you've started, and I know you've got in mind, and you know, you've got to be hopeful.
Well, you've got to keep drilling, right? And the problem is we've been up because, you know, cash has been tight. We've been up and down, and you know, when we wanted to drill our Golden Swan, we had to spend $5 million in the decline just to get there, because that was cheaper than drilling from surface or from underground, and quicker. So they're not insignificant amounts of money you've got to invest. But you know, ideally, when we get, assuming we get Black Swan going, then obviously when we have, you know, cash coming in, we can start to divert that not only to looking for more, but it would be great to have a rig going, an underground rig going all the time, a surface rig going there, one at Lake Johnston and one at Windara. Wouldn't that be fantastic? And not having to tap shareholders on the head all the time for more equity.
Yeah, look, it's a great vision that you've outlined, and imminently feasible, and things are happening, and they'll be continuing to happen quite quickly. So look, I've really enjoyed talking with you, Peter. If you've got any final messages, this would be an opportunity to sum up. But from our perspective and from mine, I want to thank you, and it's extremely exciting times for Poseidon. So any final comments?
Yeah. No, I would say, look, Tony, thanks for having me. It's been great. We've obviously chatted a lot, you know, previously. I know you come to all the AGMs and ask, you know, good questions. I think, you know, from a shareholder's perspective, I mean, we have got a great team. I mean, one of the things that I've done is, you know, tried to pull together a whole lot of people that I knew that have got a track record. I mean, we got David Maxton on the metallurgy, you know, outstanding. Craig Jones, who did a bit of work for me at Panoramic, he was at Bellevue, Northern Star, you know, he's an operator, fantastic. We got Brendan, the CFO, experienced guy, young but incredibly knowledgeable on financing and structuring and so on. Great to have working with him. We've got, and you know, they're the people. We've got a great board. I mean, Derek's the chair. We've got Peter Michelli, who's got a great track record in nickel sulfide discoveries. I mean, Cassini's one of his. You've got Warren Hallam, who's a metallurgist but worked at Western Mining, knows nickel, involved in lots of other projects and startups, and knows how these things can go. Dean Hildebrand, who is on our board in a sort of was initially representing Black Mountain, but now he's independent. And again, young guy but very experienced. So I mean, we're very lucky. You know, we got the A+ team, right? And what we've got to do is we've got to, you know, use that knowledge and skill set, and then bring in, you know, those consultants and get the right financing, get the right offtake, and pull it all together like we did with Panoramic. We did exactly the same thing, and it's not rocket science, but you've got to, it's you know, things have got to come together, and you've got to plan, and you've really got to look at the risk assessment. One of the things I've learnt with the restart of Savannah is that it's the stuff that you don't think will go wrong that does go wrong. And I mean, I could run you through the list of things that broke or were problems there that we never anticipated when we did the restart. And that was from a plant that had been shut down for 2 or 3 years. So you have to go through a really, really risk assessment and think about things that are really you wouldn't have thought of. So we'll do a bit of that, and there'll be a lot of planning, and you know, we'll make sure that when we pull the trigger that we're going to execute well, and that collective experience of some good startups with also some tougher ones, I think will be, you know, well utilised in the restart. So exciting times. You know, it's really keeps me focused and motivated, as you said, to get up early and go to work. But as I said, it's not me, it's the team. It really is we. I really, you know, can't emphasise enough that, you know, I've had a lot of experience, but, you know, I've built a team around me that are really the arms and legs, and I can direct traffic and do all that, but they're the people that have got the experience and got the knowledge, and they're the ones that, and as a team, we're going to pull this off, and that's what we've been, you know, that's the strategy the board set, and we want to deliver on that. But, you know, you've got to do it, you know, in a slow, methodical way. You rush into these things, it won't go well. Yeah.
Look, Peter, it has been a genuine pleasure talking with you.
Thanks, Tony.
So thank you very much. And for everybody out there, have a look through this session and listen to what Peter has put out there. It's a great story, and I think it's a company that is coming on strong. Thank you.
Cheers, Tony.